Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 28th, 2025, and we're diving into HP's fiscal 2025 second quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss HP's latest financial performance.
Let's get started with an overview of HP's Q2 results. What stands out to you?
HP reported a net revenue of $13.2 billion, which is a 3.3% increase from the previous year. However, their non-GAAP EPS came in at 71 cents, which is below the forecasted 80 by analysts.
Revenue and profitability overview. Let's start with the top line. HP reported a net revenue of $13.2 billion for Q2 2025, which is a 3.3% increase compared to last year. John, can you shed some light on this?
Absolutely. The revenue growth was primarily driven by strong performance in their commercial personal systems segment, which saw a 9% increase. However, the overall profitability was impacted by a dynamic regulatory environment and increased macroeconomic uncertainty.
And how did this affect their earnings per share?
HP's GAAP EPS was 42 cents, down 31% from the prior year, while the non-GAAP EPS was 71, down 13%. This decline in EPS reflects the challenges they faced, including restructuring and other charges.
Operational efficiencies and future outlook. John, let's talk about HP's operational efficiencies and their future outlook. What are the key points here?
HP's GAAP operating margin was 4.9%, while the non-GAAP operating margin was 7.3%. They faced a negative free cash flow of $95 million, but they still managed to return $0.4 billion to shareholders through dividends and share repurchases. Looking ahead, HP has adjusted their outlook to reflect moderated demand and trade-related costs, but they expect to offset these by Q4.
That's interesting. How are they planning to achieve this?
HP is focusing on expanding their manufacturing footprint and reducing their cost structure. They are also executing targeted mitigation strategies to handle the increased costs due to tariffs and other trade-related expenses.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did HP's different segments perform this quarter?
The Personal Systems segment reported a revenue of $9.0 billion, up 7% year over year, with commercial PS growing by 9%. However, the Printing segment saw a decline, with revenue down 4% to $4.2 billion. This was due to a decrease in both consumer and commercial printing revenues.
What strategic initiatives are they focusing on to drive growth?
HP is emphasizing their future of work strategy, which includes enhancing their personal systems offerings and expanding their services and subscriptions. They are also investing in hybrid work solutions and advanced compute solutions to capture emerging market opportunities.
And CFO insights. What insights did HP's leadership provide regarding their performance and future prospects?
Enrique Lores, HP's CEO, highlighted their solid revenue growth and the strong performance in commercial personal systems. He emphasized their quick response to regulatory challenges and their focus on long-term sustainable growth. CFO Karen Parkhill mentioned the adjustments in their outlook due to macroeconomic uncertainties and their strategies to mitigate these impacts.
It seems like HP is taking a proactive approach. How do you see this playing out?
HP's decisive actions to expand their manufacturing and reduce costs are likely to strengthen their foundation. If they can effectively manage the trade-related costs, they should be well-positioned for sustainable growth in the future.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast and how HP's actual performance compared to analyst expectations.
Analysts had forecasted an EPS of 80 cents based on a survey of 4 analysts. However, HP's actual non-GAAP EPS came in at 0.71 cents, which is 0.9 cents below the forecast. This miss can be attributed to the restructuring charges and the challenging regulatory environment they face this quarter.
And what does this mean for investors?
While the EPS miss is a concern, HP's strategic initiatives and focus on cost management could provide a positive outlook for the future. Investors should keep an eye on how well HP executes its mitigation strategies in the coming quarters.
Key takeaways. As we wrap up, let's summarize HP's performance this quarter. Despite a revenue increase to $13.2 billion, their non-GAAP EPS of 71 fell short of the 80 forecast. They faced a negative free cash flow of $95 million, but returned $0.4 billion to shareholders. John, any final thoughts?
HP is navigating a challenging environment with strategic initiatives aimed at long-term growth. Their focus on cost management and manufacturing expansion could position them well for future success. Investors should watch how these strategies unfold in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on HP's performance in the comments below.